All right, it has been a while since I've recorded a video about anything Broadcom or VMware related. It's been a few months since our last discussion around tax issues that a lot of folks dealt with as part of that acquisition. Coming with the exciting news that is pervasive today, June 13th, the day after Broadcom has released their earnings, which has sent the stock up another 12 to 15% from its already sort of parabolic run that we've seen. Wanted to make a quick video and just share some thoughts around what folks should be thinking about, especially those who are clients of ours and those who will be having vesting events and coming into more shares of Broadcom in the coming days, and with shares that they've recently acquired as part of vesting. Talk about earnings a little bit. So I'll get right into it. What I thought was interesting about the earnings, although I'm not a stock analyst per se, or at all, not just per se, is as it stands today, Broadcom is now a almost $800 billion market cap by a company in the US stock market, which is fairly stunning considering where it has been just 2 years ago. And if you look at the specific earnings notes, I thought this analyst from Bernstein put it really nicely. Yes, the earnings were great. So beat estimates, beat earnings per share. They announced a 10-for-1 stock split, which is what all the cool AI companies in the US are doing these days. Shout out NVDA. But they mentioned basically it's the second best AI story in the space next to NVIDIA. And despite that, though, what I found is interesting is its core businesses were a little weak as it's transitioning into AI. So it's almost like investors are saying, we don't care about the any of the old business. If it's AI and it's growing, we want it. And it's indicated if you dive a little further into the earnings, storage connectivity revenues were down, broadband revenues were down, industrial resale was down, but infrastructure software sales were way up. Part of that is a big reason, part of VMware. They guided that their AI generator revenue would be about $1 billion higher over the next 12 months. And they announced the big stock split. So all big news, obviously. What I think is starting to occur is, well, not starting to occur, what has been occurring in the market. We just recorded a podcast around some of this stuff last week. Give that a listen. Is there's just a clear obsession with large U.S. technology companies, specifically those that are capitalizing on AI. The Magnificent Seven, which everyone's talked about, the biggest, the sort of best performing large U.S. technology stocks, Magnificent Seven, they were dubbed, which the media loves to come up with those fun short names and nicknames for these things. Though that seven was NVIDIA, which is sort of pulled out into a league of its own in terms of its performance. Apple, Microsoft, Amazon, Meta, Tesla, and Alphabet. Those seven companies, Broadcom's got a real case to be upset that they haven't been included in that discussion. That's why I think the stock analyst who said it's been the sort of second best story in AI is right. It's sort of flown underneath the radar for a company that's gone up 200% over the last 2 years. Pretty hard to fly under the radar, but I think because of the obsession that the media has placed in some of these other companies, and NVIDIA in particular, it's a little bit less talked about. All right. So on my screen, looking at the 2-year performance, just to use 2 years, NVIDIA, like I said, parabolic, very unprecedented for a company of that size to grow that quickly. And then, as you can see, just below that, Broadcom coming number 2 in terms of stock performance amongst all of these over the last over the last 2 years. Same story. Meta's close on its heels over the last 3 years. Broadcom breaking out a little bit more than all the other ones. Microsoft, I think, number 3 over the last 3 years of the companies that we've got here. And then over the last 1 year period, very similar story. Meta has done fairly well as well. But if I remove some of these two, right? So forget individual companies and NVIDIA. Maybe we'll leave NVIDIA in there for a second. But if you compare it to regular stock market benchmarks, it's pretty absurd how we've seen these stocks perform. So if we compare Broadcom and NVIDIA to the NASDAQ 100, which is heaviest and most exposed to these technology companies, the S&P 500, which is similarly exposed, and then the rest of the world's stock markets outside the US over the last year, it's pretty absurd that even the tech-heavy NASDAQ index, Broadcom has basically tripled the performance over the last year. Again, NVIDIA in a league of its own. To me, all of this, if I'm an employee, if I have shares, if I've seen my net worth swell as a result of having exposure to this company, means it's probably a good time to take some profits. As we've talked about quite a bit, we have a very principled approach to how you should be thinking about your stock compensation, how much your net worth should be made up of any one company or investment, how to most tax efficiently handle that. And I think for those who have vesting events coming up, the stock split is set to take effect on Monday. We'll see what that does to the price. But I would not be greedy, right? I would not be greedy at this point. That seems like a good way to maximize regret in the future, especially for those who maybe came over from VMware and got major grants that are going to be vesting over 4 years. 3/4 of that vest has yet to occur, which means you have no control over it. You only have control over maybe less than 1/4 of that at this point. To me, I would take some profits off the table. Now, the problem with that is for anyone who has seen their net worth swell as a result of owning the stock, both short-term or long-term, but more specifically short-term, you have large taxable gains. So if you sell, you're paying potentially a boatload of taxes. We have some thoughts around that. So reach out because we'd love to talk through how you can efficiently and principally manage this whole situation as it relates to your individual situation. But also, we've got a new, pretty unique idea that is not all that common in the industry that may be an interesting anecdote. The idea behind it is that you may be able to diversify your position without paying taxes up front. So you're deferring your taxes, but diversifying. And if diversifying is and maybe should be your first goal, and trying to be tax efficient is your second goal, this may give you, dare I say, your cake to eat it too. Although in finance, as we all know, there's no such thing as a free lunch. You would be in this example just deferring gains. And again, this is not a fully baked idea, but it's something that we're kicking around and I think is really interesting for the position a lot of our clients are in. So all that is to say, I'd be remiss not to plug this time of the year. I know the EUC division is splitting out from Broadcom for those who are affected, but just in general around this time of the year, it's a good time to be checking your 401k allocations, turning on those after-tax contributions, take advantage of that mega backdoor Roth that I seemingly mentioned in 11 out of 10 videos that I record. Reach out to us about how to most successfully navigate that strategy and reach out to us about this situation, right? It's these are good times, right? These are good times in markets when we are at all-time highs and stocks are performing 200% every 2 years, 100% a year in Broadcom's case the last couple. It's not normal, and it's a good time to be prudent and smart and make sure that you have a plan in place so you don't get punched in the mouth and regret not having done something and been smart about things, if and when that day comes. So just a drop in with some thoughts. Feel free to disagree. Feel free to comment. Feel free to reach out to me and tell me why I'm wrong. But reach out. Love to have a conversation and discuss what's going on for anyone in particular. Just as a disclaimer, nothing that I have discussed on this video should be taken as investment advice for anyone in particular. All those conversations should be had on a one-on-one basis. This is just some general thoughts about what's going on in the market and specifically Broadcom for a lot of the people that we work with who are affected by it. Thanks.